Boy, that time flies when you're having fun. Let's get this party back on track here, shall we? Back after a weekend break. Hope y'all had a great weekend away from the markets. But it's time to roll those sleeves up. Time to get back to work. It's Monday evening. It's June 24th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to help you identify the best levels, the best setups, the highest quality opportunities that we see setting up for tomorrow. That's Tuesday's trading session. And we have a lot to talk about tonight on this video. We'll check the calendar, get the last week of June right in front of us here right now. We'll talk about the plan for the week. Then we'll open up our charts. We got oil, S&P, Nasdaq, gold, and euro on the chart review here tonight. I'm going to jump in here to oil first because you may have noticed oil went on quite a wild ride today. And it's very, very important of where today's trading session finished. We know where we came from. That'll help us get ready for tomorrow's trading session. Let's jump right in, first of all, to that black gold, that Texas tea, that crude oil futures. Day started off today inside of a range-bound scenario, turned bearish in a trend, and then whoop, right back up, right? And you'll look where they ended up, right back into that trading range. Honestly, at this point now, this day started as a range, and sure enough, ended as a range, which means I'm anticipating a little bit more of this range-bound scenario in tomorrow's trading session. Now, with that trading range, there's a bull bias to this. And this bullishness, this strong bull move tells me I want to be buying a pullback here below that trading range. And tonight, we're going to talk about a couple key setups we're looking for to buy that pullback. I'm also going to talk about some fake out breakouts overhead. You don't want to get caught trying to trade those breakouts, but always, right, always here, especially with the tensions in the Middle East brewing here this last few weeks, I'll talk about what I do need to see to qualify this market as a breakout to reach some very important levels up there, right, we're waiting for here tomorrow. So we'll talk about breakouts, we'll talk about fading breakouts, I'll even talk about what it takes to turn this market bearish tomorrow. If you're an oil trader, you definitely want to stick around for tonight's video. We'll dive into that oil in a lot more detail. How about the S&P tonight? S&P is range bound. You can definitely tell these indexes right now, these stock indexes, the Eminis, you can definitely tell they're waiting on something. We're going to grab a look at that calendar, and we'll take a look at what they are probably waiting on in just a few moments. But for right now, this market is what? What's the word for a range-bound market? The market is balanced. Now, when a market is balanced, it tells me to buy low, it tells me to sell high, and the most important thing is always about the strength of the breakout. I want to buy low, I want to sell high, I want to avoid the middle. So in tonight's video, we're talking about how I can buy that low, how I can sell that high, and I'm going to warn you, since we're sitting right inside that range, how to avoid some very typical traps and easy losses to avoid tomorrow by avoiding that middle. We'll talk about breakouts, we'll talk about buying low, selling high, and how to avoid some easy losses here on the S&P. Speaking of easy losses, look at that Nasdaq. Nasdaq is all coiled up here. We've got lower highs, we've got higher lows. Again, like I mentioned earlier, it does feel like these E-minis are waiting on something. We're going to grab a look at the calendar here in a moment. But in the meantime, though, it's very, very easy to see we're chopping around right in the middle of this trading range. Range-bound market, balanced market. What's the plan? I want to buy low, I want to sell high, and I want to avoid this middle. So patience is the game on the Nasdaq. I'm going to break down a couple different patterns. I'm looking for to buy low. It's a couple different patterns. Looking for to sell high. At the same time, what would constitute a breakout? At what point could we safely trade a breakout? I'm going to dive into all those details tonight, especially in the Nasdaq here this evening, so make sure you stay tuned for more on that. How about some gold? Well, if there's one indicator out there telling us the world is walking on eggshells right now, it is definitely this gold market. Bullish, more bullish, very shallow pullbacks. Every time these bears try to get something going, they fail and the market rallies higher. Speaking of which, That's a good idea for tomorrow. Every time these bears get their shot to sell that pullback, they seem to fail. So it would probably be a pretty good idea for me to be looking for that specific setup here tomorrow as well. I'm looking for support levels to buy off of. I'm finding areas of support and looking to be a buyer off those areas of support tomorrow. Really, at this point on gold, we have to be ready for all three scenarios, right? Markets only move in three ways. They move lower, right? I'll put together some key components for how the market pulls back, because the size of the pullback directly determines the type of entry pattern that we're going to use on this. What if the market goes sideways? We'll plan out that here. It is likely we eventually start going sideways here. We'll put a plan together for that here. And what if the market keeps running higher? It seems a little bit premature to be calling 15,000 right now, but what we're looking for here, how do we know we can confidently buy higher here? I'm going to talk about what to look for and, most importantly, what to avoid tomorrow here on the yellow metal. If you're a gold trader, stick around for that gold chart. We'll dig into that. And then, boy, that euro, you can definitely tell everybody's banking on, right, those Feds cutting rates here in the U.S., because this euro just keeps on running higher. There are four main components right now on this euro. I've got a bullish trend. I've got four main components on this chart, and I'm going to put together and use all four of these to identify the best locations to buy, the best locations to sell, if I dare even say that word right now, on this euro, and most importantly, how to avoid some easy traps to fall into as this market goes higher. Four main components. We're going to use all four of those components to put together the strategy tonight on that euro. If you're a relatively new trader, this chart will be great as we kind of strip it all apart, put it back together, and you'll see how easy it is to formulate that strategy for Tuesday's trading session. Speaking of tomorrow's trading session, we have quite a bit to get ready for. Euro, gold, Nasdaq, S&P, and crude oil. We're going to break all of these down piece by piece here tonight. No matter which market is your favorite, you're going to learn a ton. So hopefully tomorrow you can earn right along with us. Now, with that said, before we jump into those charts though, please don't forget, I send an email out to everybody on our email list right before I publish this video newsletter every evening, and I want to make sure you get that email. That way you never miss another great newsletter video. All I need for that is your name and your email address, and then hit that subscribe now button, and I'll add you to my email list. Now remember though, when you subscribe to our list, your job isn't over. You've got to go check your email, and remember, sometimes that verification email that I send you, sometimes it ends up in your spam filter, so check your spam filter, right? Sometimes these emails, since we're talking about dollars and cents in these emails, right, a lot of times they get stuck in your spam filter. So if you're waiting on me to send you the welcome email, when you register for our mailing list, I'm going to send you a welcome email along with a verification link. The welcome email will have lots of great resources for you to make the most of our time together. So make sure you find that welcome email, right? And make sure you check that spam folder, junk folder, promotions tab in Gmail to make sure you find that lesson that I'll email you over to you. And then before we jump in tonight, I have a question for you. I need your help. I'm always trying to make this video the very best place to learn and earn on the interwebs. And I have a question for you. In your opinion, what is the biggest obstacle standing between you and becoming consistently profitable and confident in these crazy financial markets we trade every day? You know, we all know there's money to be made out there, but very few people are confident and consistently profitable. In your experience, you know, we're all on the same journey, but we're all at different stages, right, in this journey. At your stage of the journey, what's the most important thing that I can teach you in this video that'll make you more confident and help you get on that track to becoming consistently profitable? It would mean the world to me if you took a few moments of your time, shared that feedback with me, drop me a comment in the comment section. And while you're down there, guys, if you tune in every evening on this video, give me a thumbs up on this video on YouTube, because every time you hit that thumbs up button, it really helps to expose this lesson to other traders who can obviously benefit from it as well. So two things I need from you, right? One, join the mailing list. And then 2, make sure you drop me a comment in the comment section. What's standing between you and becoming consistently profitable? I want to know so I can take action on this video newsletter. And then don't forget, if you have any questions, you can always call me in the office. You know, I know. Most websites these days, you try calling them and you go to some call center somewhere or some automated phone system. I'm a small business. I work with a very small group of people here in Los Angeles, right? When you call the office, we actually answer the phone. Love speaking to you guys. Love it when you guys call the office. So please don't forget, if you have any questions about a free pass to our trade room, our free trading classes, or becoming a new client and trading with us every morning in the trade room, call that toll-free phone number. I promise, right? No funny business on the phone, right? We're always here to answer all your questions. That way you get the right information about the best brokers, the best charts, the right data, and our favorite markets. So don't delay. Join the mailing list. Drop me a comment below the video tonight. Call that toll-free phone number in the upper right-hand corner and give me that thumbs up if you watch the video every night on this YouTube channel. But for now, let's get some work going here tonight. It always feels great to be back here with you guys after a weekend away. That was a great weekend. Boy, summertime is definitely in full swing, right, in the Northern Hemisphere, right? Mother Nature is just throwing a party this time of the year, isn't she, right? Good for her. Good for her. It was a long winter for a lot of you guys, right, in parts of the country. So hope you guys had a great weekend. And, of course, we're back in the action here once again. First of all, talking about this week here. A lot going on this week. Last few days of the month of June. Now, what does that mean to us? Well, first of all, the end of June is what? It's the end of the quarter, right? The quarters, of course, 3, 6, 9. So end of the quarter. What else do we know? End of the month. What else? End of the week, right? We're going into a very precarious situation. End of the week, end of the month, end of the quarter, right? It's going to start getting a lot more volatile, a lot more unpredictable as we go into the latter part of this week. On top of that, you've also got this highly anticipated G20 summit in Osaka, Japan. How fitting that it's happening in Osaka. Osaka, did you know, and you probably know this because you're a trader, right? You probably know this. Did you know that the motto, right, the actual city or town motto, right, in Osaka, Japan is to earn a profit? pretty incredible, right? Pretty interesting fact there. So I thought it was kind of funny how the G20 this year is happening in the birth of Japanese candlesticks, right, where everything started from. So what a great place to have a G20 summit where they talk about money, right, to the place where really all technical analysis started, and that is Osaka, Japan. Bottom line is that, fun fact, right? Fun fact aside, that's going to happen on Friday. Now, leading up into Friday, Saturday, and Sunday morning's G20 summit, we are definitely going to be hearing rumors about the Trump-Xi meeting, right, ahead of this G20 summit. So I would assume it's going to be lots of entertaining rumors. Twitter be flying, right? News headlines will be flying. He said, she said. This is going to be a relatively busy week ahead of that G20 summit. And when you put this all together on top of the end of the week, end of the month, end of the quarter, we're definitely going to see some action here, and it will keep increasing as this week gets later. Also, looking at tomorrow's news reports here now. Getting closer here to tomorrow here. Big news tomorrow. We got new home sales at 10 o'clock. And we got the Powell, right? Fed Powell, or Jerome Powell, right? Our Fed speaker is speaking at 1 o'clock tomorrow afternoon. Both of these should be tradable events here. The big one, of course, being the first thing here, the 10 o'clock new home sales number. But I'll tell you, existing home sales we saw last week were year over year as low as they've been. So new home sales will definitely be on everyone's radar tomorrow. And then, typically the afternoon session is a bit hit or miss. miss, right? Afternoon session, sometimes it's good, sometimes it's slow. I would imagine tomorrow you're probably going to see a lot of people asking questions from Jerome Powell about rates. Everyone's anticipating a rate cut next month in the month of July. We're going to find out, right, if he's going to give us any hints on that tomorrow afternoon at 1 o'clock Eastern time. So new home sales at 10 o'clock, Jerome Powell at 1 o'clock. We, of course, are in our trade room every morning as of 8 o'clock Eastern time. So come out and join us tomorrow. We'll watch and react to that new home sales number. And of course, right, we'll keep an eye on that Jerome Powell announcement or that speech later on tomorrow afternoon. In the meantime, though, let's get some charts going here, because now that we know the basic idea this week, we know we've got some major news tomorrow morning bright and early. Let's get prepped up here so our charts are ready to go as well. What do we know about oil right now? We know that oil started off inside of a range. That range, of course, right, broke out with a 1, 2, 3 breakout. Certainly that didn't last very long, because you can see, right, those bears failed and ran right back up. Where? Right back up into the trading range. So for the most part right now, this market could be classified as a strong bull move up into what we assume to be a range-bound market, right? We assume this is going to go right back into that same sideways chop where we started today's trading session. And it really does emphasize the fact that usually when a market starts off in a range, it has a tendency to finish in that range as well, no matter how strong the market looks as it's moving lower. So ultimately right now, we know we're bullish. We know there's potential for a trading range here. And we also know, if you look back in time here, we are really at a real frothy area on this chart, right? We had last Thursday's high, right? Friday's high, today's high. We're right up in that area right now. So you could go as far as saying that we are right at a number of major levels of resistance. And of course, in a bull market, I don't want to buy at resistance, right? I want to buy at support. So here's a couple things that I'm thinking right now. One, of course, is we don't know it's a range yet, right? We don't really know if this is going to go sideways here inside of a range. What we do know, though, is it's a very strong move higher. And anytime I see a real strong move in one direction, I should always expect to see a pullback and a retest of that high. If not, just a retest, a full-blown measured move. So if we do see that pull back, I'm looking for a retest of the major high at 23. But at the same time, though, I'd be lying to you if I said I wasn't going to be looking for, right, a larger target up at that measured move. All we need right now is just to wait and see how far this market will pull back, right? If we get a pullback, and of course I'll address that if we don't get a pullback in just a moment. Now, when it comes to pullbacks, it really has a lot to do with how the market pulls back, right? Or what type of pullback we get, right? The depth of that pullback, et cetera, et cetera. So we know we're bullish. We also know we have these levels of resistance here, right? So I don't want to buy too high up here. I want to buy a pullback. And what I always look for is some key levels of support to use, and I really like this trend line coming down overhead. This trend line might just be just what the doctor ordered there for a nice key level of support to allow us to buy nice and low. I'm also marking this up with a reversal line there, a prior swing there. So really this whole area, to be honest with you, this whole area right there is really a very desirable spot here right now to get that pullback, right, and that run back higher. So that's where I'm looking for, right, that pullback to happen. Now, once we get that pullback into that buy zone, this market will likely feel very bearish at that time. Moving average will come over, and we'll probably see those sellers try to sell back down to retest that low. That's exactly what I'm hoping for, because once those sellers, once they get that pullback coming off the moving average, now we know where their stops are. And now we know, as I always say on this newsletter, we know where the pain starts for those sellers, right? We know where the pain starts. Is this a bear market right now? No, it's not, is it? It's a bull market. And it's not just any bull market. It's got a strong leg in one direction. That strength tells us the odds of these sellers going lower is not very good. And I want to be a buyer right into where their pain point is, right? Or where their stops are waiting. And usually these are good for a failure into a pullback setup, right? Failure, of course, being you're buying right into those stops, right? The pain point, as I oftentimes, right, refer to it here in the newsletter. And then, of course, that pullback to that trend line, right? It's the failure right into that pullback. Now, sometimes we don't get such an easy setup. Sometimes the market will go down, up, and then pull back. In that situation, I've got to draw a trend line over. I'm going to try to use that trend line now, right, for that buy off of that trend line. Now, I call this a two-legged pullback pattern, or a 2LP. One of my favorite types of pullbacks. Like I said before, buying pullbacks, it really kind of boils down to what the actual pullback looks like, and that will tell you what type of pattern, right, that you really want to see. For example, right, let's say, for example, this market really runs lower, right? We don't hold the pullback yet, but now that strong move down, right? Let's say the market makes a run lower. Well, now with that move lower again, right? Remember, we're clearly below that trend line, right? Momentum's trying to shift. Well, now at this point now, those bears have a lot more confidence now selling short, right? So in that situation, I'll let them try twice. Try once, try twice. And once I have the bears trying twice, yeah, now I know all those bears are in, and I can look for that pullback, which is what I call a nested failure pattern. So just to recap here quickly with you guys, one is a shallow pullback. Moving average comes over, right? It's a failure setup into a pullback setup. Okay, two setups there. The other one would be a shallow two-legged move, draw the trend line over, up and over, right? That's called a two-legged pullback. But then, what if it just dumps, right? What if it just runs lower? Now how do we buy it? We buy it after watching the bears once, twice, then go back up. And that makes sense, right? Because you don't want to try to buy into the failure the first time. It's just too strong going lower. Right? You want to wait to try once, twice, and then buy right into it. Those can be some of the most explosive moves you'll ever get your hands on. Now, what if we don't get the pullback? Right? What if this thing just sits here and goes sideways? That's fine by me. That's fine by me. What's the best setup on a range bound scenario? There are two ways to buy this market. One is going to be a failure pattern down below the low. Same idea. Right? I'm going to wait for the market to make a run lower. That'll bring the moving average over. The sellers will undoubtedly think this is a breakout, right? They'll try to sell off the moving average, and we, the more experienced, right, educated traders, are waiting to fail it, right, and pull back right back into that range. Same basic idea. But what about if it goes higher here, right? What if it goes higher here into a sideways range, and then can we trade a breakout overhead? What would it look like? Because remember, there's a lot of resistance up here, right? I don't want to be buying high. I want to buy low. But what would it take for this market to break out of that trading range? It would take one of two patterns. One would be what we call the 1, 2, 3 breakout. And that is a 1, breakout, 2, pull back, and 3 is a strong move off the pullback. That confirms that sellers who try selling off the high were unsuccessful, and now it's on for the bulls. At that point now, I mark up that high, I mark up that high, that creates the hidden channel, I draw off of the lowest part of that pullback, and now that gives me a buy zone right off of that low. That's called a 1, 2, 3 breakout into a hidden channel pullback. And then the other scenario would be, right, we get that strong break up, right? This time, real strong move now. This one's a lot more aggressive, so you want to look for a real aggressive push higher here. It's called a 2-try breakout. 1, 2, and go. Let those bears try once, let them try twice. What's actually happening is the first pullback is just profit taking, right, from the original buyers. The second pullback is actually the one where sellers are entering that market. The trick here is you want that second attempt to be higher than the first attempt. And then what I like to do is I like to buy it on a trap, a little trap low there below that prior swing. That's called a 2-try breakout pattern. Now, what about a reversal, right? Because surely this market, maybe it tumbles, right? Maybe something happens overnight. Maybe the market tumbles. What would a reversal look like? Reversals are always the same. And we saw it just like this before. Strong move down, pull back to the moving average, jump off the moving average. That's why I said earlier the day was a range, but then miraculously went 1, 2, 3 breakout, which is also a 1, 2, 3 reversal, right? But you'll notice though, never gave us, right? Never gave us that shot to sell off that high. Right, by the time they came back to that high, it just blew right through it, went right back into that range. Again, a great testament of how typical it is for starting as a range, ends in a range. So what does a reversal look like? A reversal is going to start off with a strong move down. Now remember, that strong move down, we talked about this earlier, right? 1, 2, and then up. Look back here, right? Strong move down, 1, 2, and they keep going, right? So imagine now back here, that one keeps going. Right? Now what do? Mark up that low, mark up that high, mark up that one. That's our sweet spot now. And now we're looking for a sell signal right off the high of that. Earlier today, we never got the sell signal off that high of the channel, right? Runs right back up into that trading range. So now you know what to look for. 3 different scenarios here for the pullback. Going sideways here, running higher, even a reversal. Now all we need is a few more candlesticks to see which one we're going to get. And in the meantime, if you're here for the first time today, I probably just used a lot of terms that you probably don't know, you probably never heard of before. So if you're here for the first time today and you want to get more of a deeper dive into all the different trade setups that is discussed, my entire 3-step strategy, I'm going to give you access to a very special free trading course. I'll put a link in the upper right hand corner there for you guys. I'll put a big red button below the video tonight on our blog here at Sideways Markets. If you're serious about your trading career and you want to get a much deeper dive into the same strategy that we use every morning in our trade room, grab that free trading class in the upper right hand corner. And don't forget, when you register for the class, I'm going to send you a welcome email. Make sure you register. Make sure you check your inbox. And again, sometimes those emails get stuck in your spam filter. So make sure you check the inbox there, your junk folder, your spam folder, or promotions tab. Let's keep going. Over from the crude oil now, over to the Emini S&P. S&P and the Nasdaq are very much a range-bound market right now. Now, range-bound markets are, for the most part, they're pretty simple overall. If we have a range, what does a range tell us? A range, first of all, tells me the market is balanced. Whenever you see a range, you know that word, right? Balanced. What that means to me is that what goes down will likely come back up. What goes up will likely come right back down. Now, sometimes there'll be a news event or a terrorist attack or a political snafu. Something will happen and the market will break out of that range. And we talked about this before, right? It's a 1, 2, 3 breakout, right? Marking up that high and going from there, right? We just talked about that on the oil market. So breakouts do happen, but it almost always takes some extraordinary situation, right, for those breakouts to happen. Because in my experience, the best way to trade a breakout is to fade the breakouts. What goes down will likely come right back up. What goes up will likely come right back down. And the best way to fade those breakouts is to use what I call the 2-try rule. For example, let's say the market goes lower, right? As the market goes lower, we expect sellers now to try to sell the pullback. That's 1 try, that's 2 try, and we're going back into that range. Maybe we go higher, right? We go higher now, we run higher. Buyers, of course, now will try to buy the pullback. That counts as 1, that counts as 2, and we're back into that range. Remember, if the range is true, if the range is correct, it's a balanced market. Balanced markets tell us buy low, they tell us sell high, and what else they tell us? avoid the middle. And the hardest part right now is going to be avoiding the middle on the Emini S&P and the Nasdaq. What happens a lot is that we see the same basic pattern, but we see it right inside the range, right? See what I'm doing right here? There's your 1, there's your 2. See, these are the types of patterns. I want to buy underneath the range. I want to sell above the range. I don't want to be trading inside the range. And I'm going to warn you right now. I'm going to warn you. This happens all the time where we see range-bound markets, right? The market will try to break out, let those bears try twice, and then back up into that range. But a lot of times what happens is it'll do this. It'll go 1, they'll try to sell it, and you'll be prompted now to buy right back inside that range. It's a valid pattern. You're right? It's a valid failure. It's a range failure, but it's location, right? It ain't just real estate that it's all about location, location, location. Trading is all about location because when you're back in the middle of a range, now your risk-reward ratios are out of whack, right? I can't risk small here to earn large because we're already there, right? There's a much bigger risk usually in these situations than there is a reward. If I can get this market outside of that range, right, with a failure pattern, now I can risk small, but I can earn much larger. That's a much more desirable trade. And anytime there's a big reward available, we know it's going to attract more traders. When there's a bigger potential reward, it attracts more traders. What happens? It's a much more reliable trade. Why? Because of the self-fulfilling prophecy. So as you can see back in the chart right now, here's that range. And I'll tell you, this is a pretty nasty range here. It could be even wider than this. As you can see here going back in time, it almost looks like it could even be a bit wider, right? This could be a bit wider here. So just be aware, this range might be a bit of a moving target here this week. But for what we know right now, and we can assume this range is because everyone waiting on Powell tomorrow afternoon, and obviously the President Trump, right, and Premier Xi, or President Xi, right, from China, the potential meeting at G20 regarding trade at the end of this week. I know it seems crazy. They're stalled out right now for something towards the end of the week, but we'll see how tomorrow afternoon looks by the time we hear from Jerome Powell, because that might be the political catalyst that we need to break free of this range, right? If he comes out tomorrow and says, nah, we're not raising nothing in July, all you guys are freaking out for nothing, right? These markets are going to respond to that because everyone's kind of banking on, right, this very hawkish, very dovish approach, right? Dovish meaning lower rates, right? And the trick is, right, H for higher rates, hawkish, right? That's the way I always remember it, right? People always ask me, what's the difference between dovish and hawkish? Hawkish means high in my world, right? So think about hawkish, letter H, right? H for hawk, H for higher rates, hawkish on rates. So bottom line is we may be waiting on him tomorrow. That may be the catalyst we need to break out of this range. But no matter what though, right now, look where we are. We're right back around the middle of that range here. And this is that classic example of, right, we've got to move lower here. I want to look for a failure, but I don't want to buy in that middle, right? I don't want to trade that middle. So really at this point, what I'm watching for is I want to see us go down, get that failure with the 2 try, and then back up in. I want to go up, get that failure, then back in. But what can we do around these levels? What's the biggest problem with trading in the middle? The biggest problem is there's no space. Now, what's the best way? What's the best setup? And I'm going to see if you guys pay attention every evening on this newsletter. What's the best setup if you're worried about lack of space? Trap patterns, right? Trap patterns are always my go-to if we stay nice and tight here. So here's what we're going to do. I've got this trading range. I'm using that trading range to create the battle zone above and the battle zone below. You'll learn a lot more about trading ranges and how we use trading ranges in that free trading course that I mentioned earlier, linked up in the upper right-hand corner, or that big red button below the video tonight on our trading blog. The bottom line though is that's where I want to sell. This is where I want to buy. And as you can see right now, we really are nowhere close to that area. So what I want to do is I want to be prepared for what if we do go down, right? How to buy that. And then obviously, right, what if we don't? What if we keep this mess up? What if we keep kind of bouncing around, right, inside of this and we don't really get outside that range tomorrow? What's the best type of setup that we could be looking for? And really, we see a great example right back here where we go up, right? The buyers try to buy, right? We pull back. Nobody wants to sell down there, right? What do? They look for a trap. Traps are going to be your best friend here for tomorrow. So let's play two scenarios right now. Scenario one is we stay right nice tight to the range. Scenario two would be we get a big breakout, right? And how we get back down into that trading range right here tomorrow morning. So first things first, how do we buy this thing if it doesn't give me a very good breakout, right? How do we buy this thing going higher? Well, we already talked about this. This is first try. I'm waiting for a second try and then trying to go up right into that range, right? I've got one try. I'm waiting for these bears to try a second try, right? Using that, what do we call it again? The 2-try rule, right? But now the problem is, what does that do? That puts me where? It puts me right inside that range. Not a very reliable place to be trading. You're more than welcome to take that trade, but if you take that trade though, you're going to want to make sure you leave a little bit less off the position, because what I'm looking for is for that trap. This is ultimately where I want to be finding those buy setups here tomorrow, finding some sort of trap low. And you might call this a nested reversal or a crown reversal. If you're a frequent viewer here on the newsletter, you've seen this pattern before. But really, all I'm trying to do here is I'm trying to get the buyers to take the bait going higher, get them stopped out, and then use those buyers as the fuel, right, to get back in once it jumps up. Because all the buyers who bought as it's going higher, once they see it running up again, they're going to chase right after it. And at that point, the bears will have tried to sell it short, right? And they'll be stopped out. This will be a great setup for us. And again, you're going to see these all over the place, right? We go up, failure, trap, right? And that's where sellers are selling, right? They're selling high using traps, right? So we go up, we try to get that failure. Nobody wants to sell there, right? What do? We mark up that high, we sell it with that trap high, right? And back over. Again, I call these failure patterns. This one in particular is called a nested failure pattern, because again, you're combining multiple patterns, a trap pattern, a failure pattern inside one setup. Now, what if the market makes a run lower? Then what do? Well, if this market makes a run lower, I think we've got to draw that trend line over top, right? Draw that trend line down top, then look for, this will be 1, right? And then look for 2, and we'll look for that, right? We'll look for that 2 try at a later stage in the session tomorrow. In fact, this could get really good where we may see that market run lower here. We may get that failure into a pullback coming right off of it, right? That is not far-fetched there to think that could easily be a possibility tomorrow. So for example, if we see this market run off that low, right, now we've got that trend line coming down, draw that trend line over. Again, what I would do is draw it like that. Oops, sorry about that. Draw it again here, Joe, right? Draw it like that. You've got that trend line now coming over there. Right, now we go up and over. Use that trend line now as your first setup to get long. That will, of course, get your moving average coming over as well. And then we can look for that up, back, and go on that failure now coming back up. So again, because of the type of pullback that we're seeing in this, or in this case, the type of move lower, it's pretty easy to see that trend line will likely be there. Looking for my 2-legged pullback, and then of course, looking for that pullback pattern coming over. Now, I have to be honest with you guys, sometimes they don't do that. Sometimes they won't pull all the way back like that for you. So what you want to look for in those situations is, if it goes running higher, just stay patient. Find that trap. You got it, right? Remember, traps are your best friend as we go back towards the middle of that trading range. Now, obviously, if we run back into the range and go sideways here, same thing is true to the upside. I want to go up, let the buyers try once, let them try twice. Now we know where stops are, and we can sell into those stops. You can see examples back here, right, where they go running up, right? They run up. The buyers sort of buy it. Where they fail, we're selling into their failure. Same basic idea here, right? So we go down, failure. Again, I can see a trend line coming down here. I'm going to try to use that trend line as my guide back in, or we go back in and roll around 1, 2, and then back down in. Now, what does a breakout look like again? A breakout would be, for example, right, if we see this market 1, 2, 3, strong move down, hold that pullback, fine by me. We'll mark up that low, mark up that channel high, and that becomes the sweet spot, selling off the high of that channel. Just remember, though, you really got to get some strength on that move through. Same thing applies if we go back into the range, right? Strong move up. I don't care about a strong move up. All I care about is, can you hold that pullback? Right? Can you hold that pullback? Can you give me some strength coming off that moving average? Because if you can't, if the buyers can't give me some punch off that moving average, now we know where stops are, and we're looking to sell this puppy right back down into that range. If they can hold and run, well, yeah, now we're going to go out, mark up that high, mark up that low, mark up that high. That creates our sweet spot now, and now we're looking for that retest, right, of those all-time highs again. So S&P, buy low, sell high, right? It's a range-bound market. Avoid that middle. And again, if we get stuck around these middles, trap patterns, right? Trap patterns. Strong move down, 1, 2, back up, right? Strong move up, 1, 2, back down in, right? Strong move up, buyers to the buy it, they fail back into that move, right back into that range. Or strong move up, they hold the pullback and run, right? I have no problem being a buyer up there as long as we see proof. And I know it sounds like you're waiting too long, but the only other option is to put yourself in really low reliability trades, right? I mean, look back here, you can see for yourself. It's not a guaranteed breakout just because the market busts higher there. We have to hold that pullback. If we can hold that pullback 1, 2, 3, then we can buy that low from there. And again, range-bound markets can be really confusing at first because the markets are confused at first, right? That's why I do a lot of extra legwork on that in the free trading course that I mentioned earlier. So grab that link in the upper right-hand corner, learn more about ranges. The same problem is kind of holding us up here right now on this Nasdaq. In fact, the Nasdaq, you can definitely tell the Nasdaq is really, really worried about something. They're waiting on something right now. It could be President Xi and Trump later this week. It could be Jerome Powell, right, tomorrow. I don't think it's new home sales tomorrow morning at 10 o'clock Eastern time, but I wouldn't be surprised. This has to do with, I assume this patience right now on behalf of the NASDAQ must be due to something to do with China because obviously, right, we're talking about technology, right? Technology, of course, the Chinese economy being a major, not only consumer, but also producer of technology, the raw materials from China. So I would imagine China is probably, right, kind of the tail here right now. It's wagging this dog right now on the NASDAQ. Bottom line is, we don't really have to know why. All we do need to know right now is I've got lower highs, I've got higher lows, and this is a range. Now, this is, you'll notice I've got this kind of rectangle right in the middle, but I just want to point out it's a triangle. And triangles are a little bit, well, they're actually quite different than rectangle ranges. The S&P is a rectangle range, and when I have a rectangle range, I take the size of that range and I create the sell zones, I create the buy zones, right? That's the rectangle range. On a triangle range, things get a little bit more interesting because what you want to do in a triangle range is you want to really focus on those edges, right? So edges, 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 right? You know what I mean? Right? The main point, the main turning points. Those are really where you want to focus on when it comes to a triangle, right? And so what I'm looking for here is I've got my edges right there. There's one right there. There's one up there. There's one right there. Now, again, we can try to fiddle around in the middle, but really what you want to wait on the Nasdaq, and I say the word wait with a capital W, right? Underline, bold, italic, wait. Stay patient right now on this Nasdaq, because I can't even think of the last time the Nasdaq was this low volatility in one session, right? I mean, this is the Nasdaq we're talking about, right? This makes some of those penny stocks blush, right? Look at how big these markets move sometimes. So we know that we have a range, but I really want to buy around those edges. I want to sell around those edges. I want to avoid the middle, right? Buy low, sell high, avoid the middle. You can see here I've got some measured moves down here. I've got some measured moves up here. I've got some levels I'm watching in and around this area. So stay away from that middle, buy that low, sell that high, right? Avoid that middle. And remember, if you are going to trade towards the middle, what's your best strategy? Trap patterns, right? Trap patterns. And you'll learn a whole lot more about trap patterns in that video class that I mentioned earlier. So here's the game plan, right? I want to get this party trying to go lower. Right? I want to get these guys trying to make this run lower, get this moving average coming out, get these bears trying to sell off that pullback. Because once I've got those bears trying to sell, now I know where stops are. I can look to buy into stops. I can grab the pullback to the moving average. And you know, a lot of rookies, they don't have the confidence to trade the breakout failure. And that's okay. I mean, you know, it's perfectly fine to skip the failure pattern if you're not quite confident about it, because you'll probably get the pullback that comes thereafter. Pullbacks are pretty common. They're not going to happen every time. Sometimes they will just run right back into that range. But again, don't be worried if you don't quite feel confident, right, in that failure setup. You know, failure pattern. Remember, you want to take that failure pattern down below that range, then into that pullback as we go higher up from there. Same thing goes to the upside, right? I don't want to trade the middle. Let it go up. Get that moving average coming over. Let those buyers try to buy the pullback, right? Good example back here. Go up. The buyers try and see ya. Right back down into that trading range. That's the same basic idea here on that Nasdaq. We let those buyers try once. We let them try twice. We know where those stops are. And again, we're selling into stops. Don't chase after it, right? Sell that pullback thereafter. Selling the stops, right? Selling into that pullback. Now we're talking. Right? Now we're talking. Those are the types of patterns we look for on range-bound markets. And then what does a breakout look like? Right? Breakout pattern, right? 1, 2, 3. Big, strong breakout. 1, 2, and 3. Remember, we're not just gonna buy that first pullback. That pullback could easily fail. Right? Just look left. Right? Look left. Don't take my word for it. Look left for yourself. Right? You can't rely on those pullbacks. They're going to rob you. Right? Then mark up that high. You got it. Mark up that high. Back down to that low. Again, it's that low. Okay? Not that low right there. And then mark up that sweet spot. And now we're buying a pullback right into that sweet spot. And usually what happens is if you were to take that and kind of blow that area up, it's usually going to be a failure, right, into a pullback. The same idea we've talked about so far, right? So if you were to kind of blow that area up right there, it'll usually be that same kind of failure, right, into pullback setup, that combination setup coming off the low of that channel. Or if you want to really be aggressive, right, it's that strong move up. Let the profit taking 1. The short sellers will come in 2. And then again, what do you want? That trap, right? You want that trap low. That trap low will keep you away from buying high up here, right? And it'll give you a chance to buy nice and low. Remember, anytime you're worried about buying into resistance like that, right? Like that high up there at 78.21, trap patterns are the key, right? Remember, the first one will be profit taking from the buyers, right? The second one, those will actually be the short sellers getting into that market. You'll be now buying into the stop losses of the short sellers, and you'll also most likely have buyers who got out too early, and they'll come in chasing after that. It's the buyers who are kicking themselves for getting out too early. That's the big reason why that type of pattern works, because once they see this thing run higher, those buyers will chase after it. It's the same type of buyers who are buying that breakout are the same type of buyers who will buy that breakout afterwards as well. So those are two easy ways to trade that breakout. And the same thing goes to downside, right? Strong move down, hold the pullback, and run, mark up the low, mark up the high, mark up the high, right? And we're selling off that high. Or it's that strong move down, 1, 2, right? Trap, again, lower low, let the buyers try once, twice, and we're selling right into those stop losses. Again, we call that what? A 2-try breakout pattern. Most important thing for tomorrow is stay out of this mess in the middle. Stay out of that mess in the middle. Get it down. Failure, back up. Get it up. Failure, back down. That's the way you want to run your day tomorrow on that Nasdaq. Let's keep going. How about some gold right now? Boy, gold's a walk in the park when you look at Nasdaq. Right? We know pretty much everything we need to know right now on this gold. First of all, it's a trending environment, which means we know this market's hunting for something. What is it hunting for? It's probably hunting for that measured move up there at 1426.5. And it looks like at this point, it'll probably get it. Okay, what else do we know? We also, channels, right? Channels are really great. It's bullish. So I want to be a buyer. And one of my favorite ways to trade a trending market is to draw a trend line off the highs, bring it down to the low, and create like a hidden channel, right? I call these hidden channels. You know, most folks would probably draw their channel like this, right? And like that. Yeah, I'm not going to deny that's definitely a valid channel, but if you're really looking for the most precise levels of support and resistance, in my experience, draw your levels off the resistance first. But wait a second, Joe, didn't you just say it's a bull market? You want to buy at support? So why are you going after resistance levels first? I know it's counterintuitive, but you'll notice how well it fits now. Right? All these bounces off that low, put a midline right in the middle. That midline fits a glove. That's a good looking channel. That's going to create a hidden level of support. And the reason why I like those hidden levels of support, you can also see I've got one down here as well. So really this whole area, right? That whole area down here is a sweet spot there, right? To be buying off of it. So I'm trying to find levels of support. Another support level. Right? How about this 1414? Right? 1, 2, 3. Yeah. I'm going to go out on a limb on this and say a lot of people are probably going to use that 1414 level tomorrow. I would bet pretty much everybody knows where that is. You know, remember, anytime you see multiple tests like that, you know that short-term traders see it, long-term traders see it. You could have been on a 60-minute chart, a 5-minute chart, a tick chart, right? You could be on a darn Renko chart here, right, on this gold. Everybody sees that level now at 1414. So that is definitely an area that I'm watching for. And then, of course, we did spend quite a bit of time in the pre-market today inside of a range. Ranges, of course, oftentimes act as magnets. So that will become, right, a key level as well. Now, with that said here, we know we're bullish. We know we want to be a buyer here, right? I want to buy at areas of support. I've got support. I'm going to go with this pullback right about there. So now we kind of know where they're trying to go. Now we know where we're waiting for that pullback now, right? And by now, you probably could teach the class without me at this point, right? It's all about the way the market pulls back, right? When do you buy? Well, it all depends on the pullback setup. It all depends on how the market pulls back. For example, a shallow pullback, right? Relatively shallow pullback. Moving average comes over, right? Bears are to sell off of it. What do? We're buying into stops. We're buying that pullback for the move back up. Failure pattern, pullback pattern. But wait. What if they bounce off the moving average and then go lower? Perfect. Draw that trend line down. Use that trend line now for that two-legged pullback. And remember, that two-legged pullback oftentimes, right, will do this. Oftentimes it'll run up, pull back, and go. So it's not just a two-legged pullback, right? We may also see that pullback off the moving average there as well. You're buying nice and low, right? You're not buying high up here. Or maybe it shoots lower, right? Maybe it shoots lower, But wait a second. When it shoots lower like that, isn't that a bear market now? No, because what has to happen? It has to hold the pullback and run, right? It can't just make a strong move lower. It's got to hold the pullback and run, or else what? It's going to run back up again, right? So we have to wait for what? We've got to wait for those bears to clobber it, right? They've got to take it lower. It's not really the bears, by the way. It's actually the buyers who are not buying it. If it's the buyers who will ultimately let that market go lower. Make sense? Right? It's not the bears forcing. I mean, it can be. There's always an exception to every rule. But in most situations, when a market's bullish, it's the buyers who for whatever reason are no longer they no longer have that appetite, right, to buy that low anymore. The bottom line though is at that point, if we see a real strong pullback, now let them try once, let them try twice. You got it. Nested failure, 1, 2. Right? And then back up we go from there. And again, the entry on this, we're looking to buy right into those stop losses, right? Get that moving average coming over, and you can grab that pullback as well. It's all relevant. And again, it all kind of boils down to what type of pullback do we get? That will tell me the right pattern to be using. Now, what if we go sideways up here? Doesn't look like it right now, but hey, I don't know, right? Maybe we go sideways. What if we start going sideways here? What do? We know the market's bullish, right? We find our buy zone down here. We'll do that together tomorrow morning, obviously in the trade room, right? What's the plan here? I want to see him try to run lower. I want to see him try to sell off that moving average, right? Get him to sell off that moving average. What are we doing? We're looking to buy right into that failure here. Remember, stay out of the middle, right? Stay out of that middle. If it does go in the middle, what's the pattern? What's the pattern, right? If we get this, failure back up, what do? Trap, right? Trap. Don't take those low probability trades. What if the market jumps higher, right? What if it keeps going here? If it keeps going, it's going to be a spike in channel here. If it keeps going, it'll be a spike in channel. I'm going to mark up that high. I'm going to mark up that low. If this thing keeps on pushing higher here, right? Doesn't look like it right now, but if it keeps pushing higher here and keeps going, I'm going to mark up that high, call that the low, and be looking for that buy right off of that low. The key is going to be it's going to hold that pullback, right, and keep making that run. At that point now, I'll use that same measured move, right, for our next target as we go overhead. So if we do end up kind of running higher here, right, running higher here right now, that'll be a pretty clear sign. The fundamentals are still drawing this price is higher here. We'll mark up that high. We'll call this a spike in channel. Spike and channel patterns are pretty reliable setups. You should be able to get 1, 2, and 3. So one more off of that low, right? 1, 2, and 3. The magic number of 3. And then from there, the market will typically be too high to buy up there. So what you want to do is you want to look for traps. Right? Look for that deep pullback. That deep pullback will typically result in a trap into failure, right? Into pullback setup and up and over. So if we do keep running higher here, just remember, stay patient to wait for that pullback, right? If you can't get into it early in the first 3 pullbacks, right, of that spike in channel. And as always, again, right, what's a reversal? A reversal will be a strong move down, a pullback to the moving average. You got it. Right? Big, strong blast off that moving average, mark up that low, up off that high. And again, we're looking to sell off of that high. So don't forget, you can learn all about the basics of these patterns, see hundreds of real examples right from the charts, right, as part of that free class in the upper right-hand corner, right? I'm just marking this stuff up in the chart right now, but we go over hundreds of chart examples inside that free trading class, so make sure you check that out. Next up here, over on the euro, last but not least here on the euro, I mentioned this earlier. There are 4 main components right now on the euro. One of them is going to be this strong move higher, right? Anytime we see a strong move in one direction, we know the odds are very, very good. We get a shallow pullback, right, and a retest of that high. Second component here is a trading range. It's a bull move up, right, into a range-bound market. Anytime I see a trading range, what do I look for? We look for that move down, that failure, and back up. Same basic idea, right, as we talked about on pretty much all the other markets tonight, right? So apply that same basic strategy, buying below the low of that range. What else do we know? Number 3, right, is going to be this spike in channel, right? Now, we just talked about this spike in channel, right? The magic of 3. 1, 2, and 3. Okay, what does that tell me? It tells me now to mark up these lows and look for that deep pullback into a failure, into a pullback setup, and then what? A retest of that high. Okay, what else do we know here right now? One more. Actually, there's 2 more, actually. I guess there was 5 components here. Mark up these highs. Down to this low. What is that? That's a hidden channel, right? Might not be that hidden. I'm sure a lot of folks see it. That midline kind of gives it away in there. What does that channel tell me to do? It's support, right? To buy off that low. And what a beautiful area that will be, right? That pullback goes down to the low of a spike in channel. It goes into the buy zone of a trading range, right? It's the low of that channel, right? I mean, there's 3 big technical clues all telling us to look for that buy down around that low. What else? One more component, and that is the big round number. The biggest of all big round numbers for the euro, at least lately, right? Unless we count the 10,000 and the 20,000, but 15,000 is a big number. This is a magnet right now. And again, with most traders assuming the Feds are going to cut rates in July. That's what they led us to believe, right? And that's what the media wants us to believe here. That, of course, is bad for the U.S. dollar, which is good for the euro. It does feel like that 15,000 is kind of in the cards, as they say, right, for some time this week. Now, this has been one hell of a run here, you can notice, right? We went 14,000, blasted higher, and we've seen very, very shallow, right, pullbacks ever since. So I'm not going to go out on a limb and say we're going to run right up to 15,000 tomorrow, but we may make a run for it. And if we do make a run for it here, what would be the best pattern to use? A trap pattern, right? Anytime we see a level where we think that's the next resistance, if I can get that strong move up, what do we want? The 1, yeah, the 2, the trap, and go. That's exactly what I want to be looking for tomorrow if it makes that run going higher up towards that big round number. So ideally here, I want to see us pull back. I want to see that moving average coming over. I want to see us try off the moving average, get those bears to get stopped out so we can buy into their stops, buy that pullback and back up. Or maybe it's a 1, 2, we do a trend line over, right? Up and over, and then back up we go, right? Or maybe it's a big shock to the system. Big, strong move down. What then? Right? We know that moving average comes over. We know the bears, they're not going to give up after one try. They're going to probably try twice. And once we see those bears try a couple times off it, yeah, now we're talking. Now we know where stops are, and we're buying right into those stop losses. Now, tomorrow morning, the euro with Powell speaking tomorrow afternoon, this euro may be pretty quiet here again. Everyone's kind of walking on eggshells right now, waiting to see if he's going to kind of confirm what a lot of people assumed from last Friday or Wednesday's, right, FOMC announcement and press conference that followed it. So if we're going sideways tomorrow, just stay patient, right? Don't get too anxious. It's just a waiting game here right now on some of these markets who are stuck inside of ranges. Boy, oh boy, great day today, and we're going to have a great day tomorrow as well. Every single day, we all know there's plenty of reliable opportunities. The hard part is actually applying the strategy to a moving market, right? There's news events we're going to work around. Sometimes the markets are slow and we have to stay patient. Sometimes the markets are really fast and we have to be light on our feet. This is why our trade room, every morning, Monday through Friday, we open up at 8 o'clock Eastern time. The strategy is simple, as you can see. What's not so simple is actually applying this on a real chart, and that's why we do it together every morning. That way you can come in, look over my shoulder, right? Watch how I set everything up tomorrow. Watch how we hunt for those setups. And again, I want to see you there with me tomorrow at the opening bell at 8 o'clock Eastern time. To get started, I would do that as soon as you can. That way you get time to go through orientation, install the software, and be ready for tomorrow morning. You can do that by using that advanced button, right? The advanced course right below the video tonight on our website. If you're not ready yet to be a member, maybe you have questions, you can always call me on that toll-free phone number. I'm always here to answer the call, answer all your questions. We can talk about flexible payment options, different ways to get started, or maybe you just want to learn more about our trading strategy and see that 3-step strategy in action. Our free trial has a free pass to attend our trade room, a free trading course to learn the strategy, along with hundreds of chart examples so you can see how the strategy works on a moving market. Grab that free trial right to the left of my ugly mug. And don't forget, when you join the free trial, you've got to check your inbox, check your spam folder, check your junk folder, because sometimes those emails get stuck in those spam filters. Guys and gals, as always, I'll be back tomorrow morning, 8 o'clock Eastern time, with all you guys in the trade room. If I don't see you guys tomorrow morning, we'll come back and do it again tomorrow afternoon. Same time, same place as always. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.